Hello and welcome to Macrosutra. This is Akanksha Mishra. Over the past few days, there has been a trend of a declining dollar against steadily appreciating Asian currencies. So, the Taiwanese dollar, for instance, has risen by 8% against the dollar, which is the sharpest surge since 1988. The Taiwanese president has attributed this surge to market speculation, but it's not just Taiwan. Even the Thai baht and the Korean won have appreciated. Now, what are the reasons for this appreciation and how this is going to impact the global economy is the subject of today's discussion. And for that, we have with us Radhika Pandey, Associate Professor at NIPFP. Thank you for being with us, Radhika.
Thank you, Akanksha.
Let's get right into it. Let's talk about what exactly is causing Asian currencies to suddenly rise in value and why is Taiwan's currency leading the way?
So has been over the last couple of weeks steady appreciation of some of the Asian currencies, and as you rightly pointed out, Taiwan currency has led the pack. The Taiwan dollar has seen the sharpest surge. Just the surge halted on Tuesday, but before that there was a sharp surge in Taiwanese dollar, 4% every year, which was quite unprecedented. So other currencies like Singaporean dollar, Korean won, Thailand currency, most of the currencies other than Vietnam currencies appreciated. So other than the Vietnam currency, most of the other currencies, most of the other Asian currencies saw an appreciation of varying degrees. Now there are various possible explanations for this, but coming to Taiwan, because there the explanation, the surge has been the maximum, there are two possible explanations. One is that over the course of several years now, Taiwan has built a large pile of dollars, particularly because Taiwan is an export-led economy and it has its maximum trade with the US. It is exporting a lot of like semiconductors, other machinery, instruments to the US. Therefore, as a result, the exporters have been piling up on dollars because they are getting foreign currency payments, they are getting payments in terms of dollars. So the pile of dollars, US dollars, is rising, and even the investors are holding on to dollars and they are investing in dollar backed assets like US treasuries. So in a nutshell, both the exporters as well as investors in Taiwan have built up large exposure to the American dollar over the last couple of years. Now since April, the beginning of April, we are seeing that dollar is showing signs of volatility. So all of a sudden there is a realization that we are holding on to large piles of dollar and this is all unhedged exposure. Because till now it was understood that dollar will rise, dollar will be a safe haven currency, it's a reserve currency, so it is safe to hold large exposure, to have large exposure of dollars without hedging. But now there is suddenly this realization has dawned upon that no, we need to hedge dollar exposure and also offload some amount of dollar holding. As a consequence, there has been an increase in the demand for local currency, because when you offload dollars, then you buy more of Taiwan currency. So there has been an increase in the demand for Taiwan dollar, and that is one possible explanation for the sharp surge in Taiwan dollar. The other explanation, which is of course refuted by the Taiwan authorities, is that during that time when the Taiwan dollar was rising by 8% in 2 days, and also over the last couple of over 1 month the increase has been around 8%. Over the last 2-3 days there was this trade negotiations going on between the US and Taiwan, and perhaps one of the asks of the US could have been that you allow your currency to appreciate, because Taiwan has a big trade surplus with the US. Therefore, if Taiwan allows its currency to appreciate, its exports will turn costly for the US. It will have to cede a part of its comparative advantage to the US. In other words, US dollar will fall in value, so US exports will get a boost because US exports will get cheaper and Taiwan products will get non-competitive. So there is a great deal of intertwining happening between currency policy and trade policy. So that is the other possible explanation, because during that same time Korean won also appreciated, and during that same time negotiation between Korea and US was also underway.
Yeah.
So that is another possible explanation. It may or may not be true, but the fact of the matter is that the US would ideally want these currencies to appreciate, because US sources a lot of its imports from Asia. 40% of its imports are sourced from Asia, and therefore its dependence on Asian economies is huge, and it would want that trade imbalance to bridge. And one of the key mechanisms through which the trade imbalance can be bridged is by appreciation of the Asian currency. So there could be other instances of appreciation, but in other instances the central banks would have intervened. But here the central bank did not intervene, and therefore that led to appreciation of the Asian currencies.
Right. So this brings me to my second question, which is that is this current appreciation of Asian currency, is it likely to be a tactical move by all of these Asian nations to maybe secure better trade deals with the US, without even the US asking for it?
Yeah.
Maybe they are preemptively doing it. Is that likely?
Yes, it is quite likely that to secure a trade deal and to secure greater concessions, there could be a possibility that they are allowing their tolerance towards appreciation of their currency could have risen. But again, as I said, there is a consequence of a sustained appreciation, because most of these countries that we are referring to, be it Taiwan, be it Singapore, be it Korea, be it Thailand, all these Asian economies, their development hinges on exports. They are export-led growth economies, and therefore if the currencies continue to appreciate, they will lose export competitiveness. Right. So the moot question that is a very important, that is prominent, is that how much, as you rightly said, preemptively also, how much of appreciation are they willing to undertake so that they are able to have a favorable deal with the US, because that is the moot question that will be answered in the next couple of days maybe.
Now, Radhika, your article and also a few other business analysts like say Bloomberg or JP Morgan, they are likening this current situation to the 90s Asian currency crisis. Right. So, can you tell us a little bit about that?
Yeah, so there was this period of mid-90s when Asian currencies saw a sustained depreciation. Starting with Thai Baht, there was sustained depreciation, and there was a flood of capital outflows happening from those currencies. And after that, there was a move towards holding large piles of dollars and accumulating dollars, and also allowing their currency to depreciate to become more competitiveness. Now what we are seeing is maybe this is the Asian crisis happening in reverse, because at that time the crisis was characterized by a sustained depreciation of these currencies, and now we are seeing a sustained appreciation of these currencies. At least the initial signals do suggest that there is appreciation. Whether that appreciation is sustained or not, or whether the central banks would intervene, because some of the central banks did intervene because the appreciation was massive. It was record level appreciation. So it is likened to the Asian crisis that these economies faced during the mid-90s, that led to these economies, instituting a large number of reforms, including local currency debt, because earlier to that, they were only dependent on dollar denominated debt, and there was a sharp flood of capital, and suddenly there was a sharp exodus of capital which resulted in depreciation of currency. Right. And now we are seeing a sustained, as I said, we are seeing an appreciation. So this is that Asian crisis, the same playbook, but happening in reverse. So that is why people are, because this is a very synchronized appreciation that we are seeing in most of the Asian economies. That is why it is being, compared with the mid-90s Asian crisis.
Right. Now, moving on, it's not just the other Asian currencies, it's also the Indian rupee which has been gaining strength. Right. So, what are some of the reasons for that, both international reasons as well as reasons within India, for example?
Yeah, so unlike the other countries that we discussed, India is not purely an export-led growth economy. So we have a domestic economy. So we are not just dependent on holding a large pile of dollars and therefore exporting to the US. So US is a big market for us, but we also have a big domestic market. So the main reasons for appreciation of rupee are a combination of domestic as well as international factors. One main factor is that there has been an reversal of FPI inflows. What we were seeing in the last few months was that FPI, foreign portfolio investors, were net sellers of Indian equity. Now we are seeing that they are net buyers of Indian equity, and part of it is linked to the weakness of the dollar, which has prompted foreign portfolio investors to invest, to reroute their capital in emerging economies, including India. So that is giving a boost to the rupee. More importantly, the sharp decline in the global crude oil prices has given a boost to the rupee. Recently, there was a meeting of the OPEC plus economies, and they decided that they're going to further increase the output by 411,000 barrels per day. So there's going to be more supply glut, and anytime whenever the oil prices fall, it is good news for India, because we are able to cushion our current account deficit despite so many headwinds. So that is the other thing that is fueling the rupee. And also there was a bunch of favorable data that came out last week that gave a boost to the rupee. For example, GST collections were quite healthy. So that is, there is this hope that now consumption may start to improve, and also RBI has been cutting interest rates, so that could have a beneficial impact on the consumption scenario. So overall, these factors have given a boost to the rupee, and also the weakness of the dollar. Dollar has weakened. Dollar used to be above 100, and now it has fallen below 100. So all these conditions, all these factors in combination are giving a boost to the rupee.
But again, as you said, no currency should appreciate too much, because then central banks will need to intervene.
Right.
So what could a central bank like the RBI do if the currency gets too strong too quickly? And why do they need to do that?
Yes, so as I said, particularly in India, we have a exporter lobby also, and if any strong currency in a crisis-like situation is a problem, because in a crisis-like situation, a weaker currency acts as a shock absorber. Because when you have a weaker currency, your exports tend to become cheaper, so you'll be able to export more. But when you have a strong currency, there could be this problem of exports becoming non-competitive. To some extent, the appreciation can be absorbed, but beyond a point, the central bank will have to intervene. There have been sporadic instances when RBI has also intervened, but on the other side, what is also happening or possibly happening is that over the last few months, there was this, we were in the reverse situation when dollar was rising and rupee was falling, and RBI had intervened a lot to prevent the rupee slide. So it had sold a lot of dollars and bought rupee, and also it had a very huge outstanding net short position in the forwards market. So now it is unwinding that, because now the rupee is stronger and the dollar is weakening. So it is unwinding some of that. So both of these factors have could be the strategy that the RBI could adopt going forward. So exchange rate is something going to be watched, but as I said, a lot of these things also depend on our own macro fundamentals. For example, now on the 31st May, the GDP data will come out. A lot will depend on that. So it's not, for us at least, it's not just what is happening in the US. We have other geopolitical tensions that are currently brewing. So rupee is dependent on a lot many factors, both domestic as well as international, and all of them have to be looked in conjunction, and that will determine the rupee dollar exchange rate and the likely response of the central bank.
Great. Now let's move on to some questions from the audience. First is by Aditya. He asks, do you think this rise in Asian currency will also lead to foreign investors getting attracted to India again, as with raising trade tensions with China or US might not attract them towards those countries? Also, do you think this is the best time to bring in much needed market reforms, especially from capital gain point of view, in order to make investments more attractive?
Yes, so that's a very interesting question, and there is a cyclical relationship. Whenever rupee appreciates, foreign portfolio investors come in, and whenever foreign portfolio investors come in, rupee gets a further boost. So it's a cause and effect relationship. But on the contrary, so in the equity side, we are seeing that foreign portfolio investors are being net buyers, but on the debt side, we are seeing the reverse, because now what is happening is that the US bonds yields are rising because US bond prices are falling, and therefore yields are rising because people are offloading, and there is this general tendency towards de-dollarization. There is this general tendency towards portfolio diversification. We have seen a lot many Asian central banks increase their proportion of gold in the overall holding of forex reserves. So because of all these things, what's happening is that the yield is rising and the bond prices are falling.
Right.
So because the US bond yields are rising, the differential between rupee denominated Indian bond yields and US bond yields is low. So there is not much incentive to invest in the Indian debt, but there is incentive to invest in the Indian equity. So as I said, things are very uncertain, but if there is appreciation happening, and if there are more than appreciation, if there are favorable macro fundamentals, and if oil prices fall, and if there are favorable macro data coming in, we'll have on the 15th of May, we'll have the trade data. So we'll know that after this disruption caused by the tariff flip-flops, what has been the impact on our exports and imports. So FPI inflows and outflows would depend upon a lot of incoming data that will now coming in, that will show the impact of Trump's policies. Till now, the data what we have is mostly till March, but from 15th of May, we'll start having the data for April, and we'll get this sense. But so long as the macro fundamentals are favorable, FPI inflows are likely in equity. But on debt, it depends on the yield differential. And on the other part of market reforms, that is something that should happen at an ongoing pace, and not wait for a crisis to happen and then we go ahead. And I think the market regulator SEBI is already instituting a lot of reforms, improving the disclosure framework, and improving the ease of investments by foreign portfolio investors. So that definitely should continue, but the FPI inflows and outflows would depend a lot on international domestic factors and macro fundamentals.
The next question is by Sankalp. He says that there's a rumor that the US is deliberately allowing the dollar to fall to lower its debt. Despite Scott Bessent's public announcement that he favors a stronger US dollar, skepticism around his approach prevails given his past conflicting statements. What's exactly happening here? Could you explain the mechanism, and is it even possible for the US to devalue the dollar just like that?
So in theory it is possible, but whether it is doing it or not, that we do not know, because the US official Scott Bessent and the Economic Advisory Council chair, they all made a statement that with tariffs the US dollar will rise, but what we are seeing is a reverse. The dollar is kind of losing its appeal because of a lot of other factors, because the response of other countries is not that jittery. It's not that China has completely devalued its currency to gain market share and all. So things are moving very steadily, and therefore if anything, the appeal of dollar and dollar backed assets is lost because of various other factors also. For example, if US is asking Canada to become its part of the US, then why will Canada's Canadian pension funds would invest in dollar, and therefore the dollar would weaken rather than rising. So a lot of things are happening because of the kind of policies that are being pursued, and they are not yielding the desired result what the policy makers expected. But in theory, if the US wants, what it can do is mechanism wise, it can undertake quantitative easing, what many central banks did during COVID and during the global financial crisis, that they buy a lot of government bonds and infuse a lot of liquidity that would reduce interest rates and reduce dollar. But as I said again, it has it's not that it is it will reduce debt and won't have any other counterproductive implication. It could have counterproductive implications, because if dollar continues to weaken, there is a threat of imported inflation because your imports will become costly.
Yeah.
So there is a threat of imported inflation, which has the possibility of transmitting into domestic inflation, and inflation could rise. And that's why we saw US Fed last night, it did not cut interest rates. They have maintained it at a steady pace because right now they do not know whether the impact on growth would be more severe or the impact on inflation would be more severe. So dollar is weakening because of the tariff induced uncertainty and because of the trend towards portfolio diversification that has gained impetus in the last couple of months and days, particularly when people are thinking that dollar may not be so stable that they want to maintain their large piles of dollars as Taiwan has done. So that is leading to a weakness in dollar.
Right. So to sum it up, as Radhika said, a large part of the trend of Asian currencies getting stronger right now is because the dollar is weakening, partly because of US trade policies, partly because investors and central banks are now trying to sell off their dollar holdings, and they're trying to reduce their reliance on the dollar altogether, even diversifying into other assets like gold. On top of that, some other countries may also be letting their currencies get stronger as a strategy as part of their trade talks with the US. Whether this trend sticks around or not depends on a lot of factors, which include global politics, it includes market behavior and central banks playing their cards in the coming months. That's all we have for you today. Thank you for tuning in.